All right, let's get this out of the way. No, the bull market did not end while I was gone. No, Bitcoin is not dead again. And no, you did not miss the top because I skipped Thursday and Friday. I was on the road to Anaheim with Whole Shot Coffee and Ashley Filet, which, frankly, is a much better excuse than I panic sold because a red candle scared me. What actually happened while everyone was doom scrolling is the market did the least exciting thing possible. It paused. Bitcoin's been grinding between 90 and 92,000. Sentiment cooled off, leverage flushed. And institutions, they kept filing paperwork. You know, the boring stuff that actually matters. This is one of those moments where price looks quiet, but structure is getting louder. Regulation is finally being discussed instead of threatened. Corporations are buying real size. Infrastructure companies are lining up IPOs, and social platforms are quietly rebuilding themselves to be crypto native, which usually means the market is setting the table, not leaving the restaurant. So after a quick break, we're grounding this in reality, where Bitcoin is, what the charts are actually saying, and why nothing happening is often the most important signal of all. We're back in a moment.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Let's talk about the market, not the vibes, the actual market. Bitcoin right now is doing something that frustrates tourists and rewards adults. It's consolidating. BTC has been chopping between roughly 90 and 92,000, cooling off after December's volatility, and, importantly, doing it without panic. No cascade, no leverage spiral, no crypto is over headlines that age badly in 12 hours. Just boredom, which, historically, is bullish. From a technical standpoint, Bitcoin is still sitting below key moving averages, but momentum is neutral, not broken. That tells you sellers aren't in control. Buyers just aren't in a rush. And when buyers aren't in a rush, it usually means they're waiting for confirmation, not exits. Zooming out, Ethereum is hovering around 3,090, and let's be honest, ETH is still lagging. It's not collapsing, but it's also not leading. That matters because in healthy bull phases, Ethereum usually wakes up before the crowd notices. Right now, still asleep, or hitting the snooze button, repeatedly. Solana, on the other hand, is quietly doing Solana things, trading around the low 140s, showing better relative strength, and continuing to act like a chain people are actually using. Low fees, high throughput, and, as we'll talk about later, a social discovery tailwind forming. XRP has cooled to about 206 after that explosive run earlier this month. Momentum's neutral, hype's cooled, and that's not a bad thing. Parabolic moves that don't retrace tend to retrace violently later. This is digestion, not failure. Now, sentiment. The fear and greed index is sitting at 41. Neutral, not fearful, not euphoric, which is exactly where markets like to build bases. And Bitcoin dominance is still elevated, around 58, almost 59%. Translation, this is still a Bitcoin-led market with selective alt participation, not full-blown alt season. Yet. If your favorite low cap hasn't gone vertical, this is why. So big picture, we're in a holding pattern. Price is resting, leverage is resetting, and underneath the surface, infrastructure is accelerating. After the break, we'll walk through the stories that actually move the chessboard. Regulation, corporate buying, enforcement, and IPOS, not the noise that fills your timeline. That's coming up right after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Let's run through what actually mattered while price went nowhere. First up, and this one sets the tone for the entire week, Benchmark called January 12th through the 18th a pivotal window for U.S. crypto regulation, with the Senate Banking Committee set to mark up crypto market structure legislation on January 15th. This is the bill everyone's been waiting for. Custody rules, market definitions, clear lines between commodities, securities, and whatever DeFi ends up being called. In other words, adults finally entering the room. If this moves forward, it doesn't just help crypto prices, it removes the biggest excuse institutions have been using to stay on the sidelines. Less enforcement by surprise, more capital by design. Next, Michael Saylor did Michael Saylor things. Strategy added 13,627 Bitcoin for about $1.25 billion, bringing their total to 687,410 BTC. That's over 3% of the total supply. But sure, tell me again how no one wants Bitcoin at these levels? This buy came after MSCI confirmed crypto treasury companies are staying in indexes, which means passive funds are now forced buyers of companies holding Bitcoin. This isn't retail FOMO. This is corporate balance sheet conviction, and it quietly puts a floor under price while everyone else argues on X. Now this was a big one. Tether froze 182 million USDT across 5 Tron wallets. This wasn't a hack. This wasn't a bug. This was enforcement. On-chain trackers lit up, and the takeaway here is simple. Stablecoins are not the Wild West anymore. If anything, they're starting to look suspiciously regulated. That's good news for institutions, less good news for anyone still pretending crypto is invisible to law enforcement. Our next headline comes from BitGo. BitGo filed for a U.S. IPO. They're aiming to raise about $200 million at a valuation pushing $2 billion. This matters because BitGo isn't a meme company. It's custody, infrastructure, the plumbing. When infrastructure companies go public, it tells you capital believes this industry is durable, not just profitable during hype cycles. And finally, Bitcoin itself. BTC spent the last several days chopping between $90,000 and $92,000, while spot ETFs saw about $680 million in outflows. That sounds scary until you zoom out. This is profit-taking after a strong start to the year mixed with macro nerves, Fed drama, geopolitical noise, equity weakness. In other words, normal. The important part? Support held, leverage flushed, and no structural damage showed up on chain. So that's the landscape. Regulatory clarity approaching, corporations buying supply, stablecoins tightening up, infrastructure going public, and price? Waiting. After this, we're slowing things down and going deep on the story that might matter more than any headline price move, how X is quietly turning crypto discovery into a native social feature, and why Solana is sitting right in the middle of it. That's next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Now, this is the story that quietly rewired a lot of people's assumptions over the weekend. X, formerly known as Twitter, announced what they're calling Smart Cashtags. And yes, this one actually matters. Not because it's flashy, not because it pumped a chart, but because it changes how people discover crypto in the first place. Here's what was revealed. On January 11th, Nikita Beer, X's head of product and, not coincidentally, a Solana advisor, posted that X is building smart cashtags. Instead of typing a ticker and hoping everyone knows what you mean, users will be prompted to select the exact asset. Tap the cashtag, and you'll see real-time price data, charts, and all related posts without leaving the app. And yes, this explicitly includes crypto, not just Bitcoin, not just Ethereum, Solana tokens, meme coins, on-chain assets, including all the ones your timeline pretends not to trade. Now let's throttle this down for a second. This is not live yet. There is no trading button, and Solana is not built into X despite what some posts claimed. This is a discovery layer, and discovery layers matter more than people realize. Here's why this is actually important. Crypto has always had a visibility problem. You hear about a token, then you open another app, then another app. Then you try to figure out which contract is real. And by the time you're done, the move is over and someone's posting a victory lap. Smart cashtags collapse that friction. One tap, instant context, live price, conversation attached. That's not a small UX improvement. That's how markets scale. And this is where Solana quietly benefits. Fast chain, cheap transactions, high meme coin velocity, real users, not just locked capital. When discovery gets easier, the ecosystems that move fastest tend to win. That's not hype. That's market structure. Now, risks. Because of course there are risks. Hype can spread faster than fundamentals. Scams don't disappear just because the UI looks cleaner. And if X eventually edges toward trading, regulators will absolutely have opinions. This isn't crypto replacing research. It's crypto reducing friction. Those are very different things. For everyday users, though, this matters. You won't need 5 apps to understand why something is trending. You won't need to guess which ticker is real. And creators can tag assets directly in content, videos, threads, memes, and let people explore at their own pace. Which means attention becomes liquidity. Again. Bottom line, smart cashtags aren't a moon button. They're a plumbing upgrade. And plumbing upgrades don't feel exciting until you realize nothing works without them. After the break, we're handing this over to you. Proof of thought mailbag, questions, comments, and a little good-natured roasting. That's coming up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back, which means it's time for Proof of Thought, my favorite part of the show. Because this is where logic occasionally wins, and usernames absolutely do not. First question comes from Still Waiting for Alt Season. Bold commitment to disappointment. They ask, is this consolidation a warning sign or just a pause? It's a pause. Warnings come with distribution, leverage spikes, and structural breakdowns. This has none of that. This looks like capital waiting for clarity, not running for exits. Next up, macro scares me, bro. Fair. They ask, do macro headlines actually matter for crypto anymore? Yes, but differently. Macro sets the tempo. Crypto still chooses the melody. Rates, jobs data, geopolitics, they affect timing, but infrastructure, regulation, and adoption decide direction. This one's from Trust the Plumbing. Excellent handle. They ask, why do you keep talking about infrastructure instead of price? Because price follows plumbing. ETFs, custody, regulation, discovery tools, those things don't pump overnight. They compound quietly, and by the time price reacts, the opportunity window is usually smaller. Next, is Solana overhyped? Every cycle needs one. They ask, is Solana real adoption or just meme coin noise? Both. And that's the point. Meme coins are stress tests. Usage reveals truth. Chains that can't handle real users fail quietly. Chains that can become platforms. Solana's numbers aren't hypothetical anymore. All right, last one. From Where Was Sen Thursday? Fair question. They ask, why no show Thursday or Friday? Bearish? Yes, extremely bearish. I personally rug pulled the Daily Brief to go hang out at Supercross in Anaheim. Classic exit liquidity behavior. But actually, this is a good segue, because SENB isn't just charts and commentary. It's real-world overlap between culture, community, and the things we actually build. Which brings us to a quick SENB project update and why crypto, coffee, and dirt bikes were all in the same place over the weekend. That's coming up after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Before we close things out, I wanted to give you a clear, honest update on SENB, because context matters. First, the obvious. Yes, price is still small. Very small. So small that text-to-speech hates it. Lots of zeros. We'll call it early. What matters more right now is structure, transparency, and whether this project is actually building. And the answer is yes. On the content side, YouTube, X, short form, long form, things are holding steady. Not exploding, not collapsing. And that's not a SENB problem, that's a crypto social media problem right now. Across X and YouTube, crypto engagement is down everywhere. Impressions are off, views are down. Creators with huge followings are seeing numbers they haven't seen since bear market lows. And it's not because crypto is dead, it's spam, bots, low-effort farming, and platforms clamping down hard. When 7 million bot posts hit a platform in a single day, everyone pays the price, including real creators. Here's why that actually works in our favor. This phase filters out noise. It rewards people who are consistent, patient, and building foundations instead of chasing virality. That's how long-term projects are born, quietly. Ground floor doesn't look exciting while you're standing on it. It looks obvious later. Now, let's talk about why there wasn't a show Thursday or Friday, because this matters. SENB doesn't exist in a vacuum. The same developer behind this project also owns Whole Shot Coffee. Whole Shot Coffee sponsors SENB, promotes it, funds it, supports it. And Whole Shot Coffee has a marketing partnership with Ashley Filek, which is why we were in Anaheim. Ashley was honored at Supercross. We were invited as her sponsor. We were there with her all weekend, meeting fans, photos, autographs, on stage, televised appearance, front row at the race. Not exactly a parent's basement activity. This is the part that matters for SENB holders. This project is backed by real businesses, real sponsorships, real-world marketing experience, and real access to audiences outside crypto. More attention to Whole Shot Coffee means more sponsorship power for SENB. More sponsorship power means more reach, more content, more stability. This isn't theory. This is how brands grow. And while all of that was happening, we're also putting the finishing touches on the next Emervale album, Road to Freedom. That's coming soon. Music, culture, storytelling, not pump mechanics. So if you're here expecting fireworks every day, this isn't that project. If you're here because you understand timing, foundation, and real-world overlap, then you're early, and you're in the right place. After this, we'll wrap it up with a final thought to put all of this in perspective.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time for my final thought, and it's this. Markets don't move when everyone feels good. They move when foundations are being built quietly and nobody's paying attention. Right now, price is boring, engagement is down, and the loudest voices are tired. That's not a warning sign, that's a reset. The crowd leaves first, the work stays. What wins long-term isn't hype, it's structure. Regulation getting clearer, institutions committing capital, infrastructure maturing, and real-world brands connecting crypto to people who don't live on charts. That's how cycles actually begin. If you're here for the easy part, you're early in the wrong way. If you're here for the right part, building before the noise returns, you're exactly where you should be. Boring now, obvious later. That's today's SENB Daily Brief. Thanks for being here. We'll see you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.